Hello and welcome to episode number 18 of Daily Market Mastery with me, Christian Rauchenwald. As always, in Daily Market Mastery, we are using Elliott Wave Theory or the Elliott Wave Principle to try to forecast how certain stocks or indices are going to move in the future. Everything I'm using, so the software I'm using, the book that you can read online for free or order as a physical copy like I have, is linked in the description down below. And if you're curious about my track record, you can use the link that's visible here and also pinned in the chat and visible in the description down below as well to check out my portfolio and my historical performance. That said, we aim to reach a 30-minute mark for those streams to not overload them with information. So I'm already going to start a timer here on my phone to not end up talking too long. And last but not least, before we get started, as always, everything that I share in this video / live stream, depending if you're watching it live or later, is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and most importantly, make your own decisions. And I'm just turning the lights on, and with that, we're good to go. Timer is running. And actually, let's hide the message and switch to there. Now, yesterday I mentioned that we had, what did we have? We had another bank failure, and miraculously the market still went up, as we saw here, although initially, then later in the day, they corrected and actually went down a little bit. Now, I'm curious to see how it goes today. The Fed's increased the interest rates further. Somehow the market is expecting that now in June and July, there will be, or that for the near future, there will be no further increases and then that the rate will decline. I honestly doubt that. And even JP Morgan, according to an email I got from tipranks.com today, expects the SPX to drop down to 3,500, which means we would go down to the previous low that we had here. Personally, I expect it to fall much further, although that will take time, so that will not happen in a month or two. It's a little bit annoying to wait because if we look at my portfolio, you can see that since inception, we have 29.8% since I started in May 2020, 34.78 in 2021. Those were both good years. Then last year, where we had a bearish year and most portfolios lost a lot, I actually achieved 45.43. However, this year so far, we're a little bit behind. Not too much, to be honest. I know minus 16% seems like a lot. But considering the returns that I have in the months where I'm super right, it isn't really that much. And we should, by the end of the year, be looking at a decent profit again. Now, obviously, I'm doing my best to share Elliott Wave Theory with you guys so you understand what's going on. Also, to give people that are familiar with Elliott Wave Theory a chance to maybe point out mistakes that I'm making in my analysis. But if all of that, so if you don't want to deal with any of that, you can just use the link in the description below, check out my portfolio, check out hundreds of other popular investors, and just basically copy portfolios. You don't have to put all your money in one portfolio, but you could also say, okay, I want to, copy Christian's portfolio with $200 and that other popular investor's portfolio with $500 or whatever fits your risk appetite and your, your investment horizon. Personally, my investments are long-term, even though I achieved more than decent returns yearly so far. My investment positions are actually mostly long-term, as you know from previous episodes. That said, if you're just starting out with Elliott Wave Theory, use the link in the description, check out the free book online, or even better, order a physical copy so you can read it not just in front of your computer. And check out episode number 1 of Daily Market Mastery, where we are covering the basics of Elliott Wave Theory, or where I'm doing my best to cover the basics. Now, we're going to pick a stock to look at today. As mentioned, we will not have, usually we started the episodes with going through the movements, so our previous labeling and the movements and what changed and whatnot, but that takes up so much time by now to summarize if our labeling is still accurate, so that we will now do that once per week, probably every Monday. And we will focus on the other episodes since there are only 4 episodes per week maximum. Next week, there will only be 3 because on Tuesday, I'm already booked at the time where we usually stream. To actually look at something new. Now we're going to go here and pick what we're going to look at. We already covered Peloton. We covered Black Knight Inc., Shopify, Apple, Block Inc., we didn't cover Disney so far. I think let's take a look at Disney. Yeah. So for that, I'm using Motive Wave here. Again, reminder, everything I'm using is linked in the description down below. So Disney was like this. So Disney, Walt Disney, co, blah, 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 in USD. So that's what we want to have. And there we go. Bar size 1 month for a start. And wait till it's loading. And in the same time, at the same time, we can go here to tradingview.com and also open Disney to double check that the data that we get is accurate. So we see Disney has a history since 1968, and very likely we will not get that full history from Interactive Broker, which is the data source I'm using here. I have not figured out why, we actually get data from 1980, and our data clearly is not adjusting for a couple of splits because if we look at that, it looks like if it would have been a very, very long decline. But what in fact happened, and definitely is the case, is that every of those red candles is actually a stock split where those values were not adjusted on the chart. So because it actually should look like this, which makes Disney pretty much for us, let's see if we can label it. We just have to figure out where we are at here, then we can label this part in Motive Wave. But to figure this out, we have to use TradingView. So I'm still lacking time with a lot of other projects to look into the data source issue to actually make sure we always have a complete data source, but it is what it is. Now, if we don't look at a logarithmic chart here, this becomes very easy. We would have something like 1, 2 could be here, 2 could potentially also be here. So it doesn't really make a huge difference in terms of how we label it. Obviously, one of them is correct, one is incorrect, but for the purpose of if wave 2 is here, wave 2 is here, it really, since we're just caring about what's the point up here, it doesn't matter that much. So could be like, for example, this 3 with some probably contracting triangle correction till here, 4, and then we have wave 5. And if we look a little bit closer, okay, that doesn't check out because here we go lower. So let's try to use Kennedy channeling technique as a help here. So let's put a channel here. That would be our base channel, and we have our breakout from the base channel, which gives us our so-called acceleration channel that has its high, not jump up here. So like this, that would be our acceleration channel. We do not have a breakout to the bottom, so we never really get the confirmed fourth wave here. However, let's actually undo that real quick. So probably more likely, no, it doesn't check out with time frame. If it would be like this, then that would need to be a flat corrective pattern, A, B, C, but that also doesn't check out. So if it would be like this, then that correction here is way too short, considering that we're here looking at like 9 years and then here just at a fraction. That makes this actually tricky. So, however, if we look here, that could be 1, 2, 3, 4-ish till here 5, which means that wave 3 would indeed be here, and wave 4 would indeed be a smaller correction where the end may be down here, but it could also be that it's somewhere here. Again, it's like not super relevant how accurate we get this. It just has to check out overall in terms of, so the big question is, did we finish a 1, 2, 3, 4, 5 impulse till up here, which would indicate that we are now in a corrective phase, which would also, however, our point 4 would be important, because if our point 4 is here, as you remember from previous episodes, I'm always driving that point home, that the corrective wave 2 very often, not always, so very often retraces in the area of wave 4 of the previous impulse wave of a lower degree, which would mean that the correction here might almost or already be finished, because we are already in this point of wave 4 area, which would then indicate, and that would be the interesting part here. So if that's the case, and we delete this here, that actually, zooming out, cannot zoom out further, okay, our 0 is now wrong, but that basically this here would turn into 1, 2, and we would right now look at the starting point of wave 3. Now, let's get rid of that. And what do we have here? That was 2020, for sure, the COVID drop. So yeah, so I said here we can only focus on the newer part because here splits have not been adjusted and the chart should actually look more like this starting from down here. But what is working out is here the low is showing as 79.07 for 2020. Circling back, zooming in that we get the candle better. 79.07, so that's the low that we have here, which would be our wave 4 point from the previous impulse of a lower degree, and that's pretty much all we care about. So I'm just gonna put a horizontal line on that 79 and extend it. So that's pretty much our wave 4 count, and then we would actually believe, okay, that here from here till here we have a corrective pattern. Yeah. Now, motive wave tends to say it goes like this, and which would mean that we obviously would look for even a lower low. Yeah, which I'm not sure applies. So let's look at a weekly chart. Do we get a better labeling of this part here, or yeah, so we would get something like this labeled. Also not sure if that checks out in terms of duration because that there's no similarity here. Here, I mean, on first glance, we would have 1, 2, 3, 4, or 3, 4, something like this, and wave 5, which could be wave A of a corrective pattern. Then we would need a wave B that basically is another corrective pattern. If we look at our one-page cheat sheet, just gonna switch the camera so that we can look at that. We know that in a zigzag movement, which is in wave 2 in 42% of cases, it could be any corrective pattern. In a flat movement, so where we would have, if we say this here is, so, or actually that's irrelevant. So if we say this here is 5, and if it were flat, then it could be, for example, A, B, C, because the flat builds a new high here. In a flat movement, it can be any corrective pattern, but not a triangle, so that B wave, yeah. But the first one would be any corrective pattern. So the big difference between a zigzag and a flat is that a zigzag starts with an impulse, so 5 waves, or leading diagonal, and ends with an impulse or ending diagonal, so 5 waves. Whereas a flat has like 3, 3, 3, so 3, 3, 5. So 3 waves for a corrective pattern, 3 waves for a corrective pattern, 5 waves for the impulse or ending diagonal. So the big question would be, let's see if we can identify that in motive wave. Probably have to go to even a smaller chart here. So 2 days, for example. 2 days. The big question would be if that would be A, B, C, then yeah, I'm kind of like having a hard time right now. What's the shortcut for drag? Control Shift D. Okay, so yeah, I have to zoom out and set myself some markers here because otherwise, so we would assume vertical line. We would assume that actually our wave ended here. So that's 1, 2, 3, 4, 5 in some way. So which would make out wave A in a zigzag, and wave B would then be any corrective pattern, which could by itself be, for example, another flat. Let's check that in 40% of cases. So that seems to be promising here. Now, if that is indeed, do we have a tool for flat corrections? I'm not sure. Just have triangle, auto wave combination, correction, yeah. So I mean that would then be basically like this, A and then B. What's the low here? Alt D. The low is 87.60, and here the low is 84. So A, B, C, and that would check out if we look into the guidelines. So I forgot to switch back. Sorry for that. So switching back now so that you can see really quick what I did. So first of all, I put in a vertical line here to mark, okay, that's where 1, 2, zooming out so it's easier to see, 1, 2, 3, 4, 5, wave A would end. And now the question would be if that corrective pattern, so if we circle back real quick to the desk cam, so we labeled the 1, 2, 3, 4, 5 impulse. Now we expect any corrective pattern, but with a 40% probability, according to our cheat sheet, flat corrective pattern as our wave B of this bigger A, B, C. And that we checked out now. So circling back. So again, wave 1 impulse, wave 2 or wave B. So wave A impulse, wave B would then be a flat corrective pattern with 40% probability, and then the last wave down would actually be another impulse or ending diagonal. Yeah. And now what I wanted to do and what we're going to do right now is switch to the book. And there I think, there we already have it, the rules. No, that's zigzag, but we are looking for a flat. A flat corrective differs from a zigzag in that the subwave sequence is 335 as shown in figures 129. If you have the physical copy of the book, it's on page 45, and otherwise chapter 1, the broad concept, you'll have to look for that. So figure 129, so we see it here. And there we go. A flat corrective pattern, blah, 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 since the first actionary wave A lacks sufficient downwards force to unfold into a full 5 waves as it does in a zigzag. The B wave reaction seems to inherit the lack of counter track and terminates near the start of wave A. Wave C in turn generally terminates slightly beyond the end of wave A rather than significantly beyond as in zigzags. Okay, that doesn't check out right now because our wave C doesn't go far enough. Let's see if we find some other examples. So we're going down A, B, C. No, that's double zigzag. A flat correction usually retraces less of the preceding impulse wave than does a zigzag. It tends to occur when the larger trend is strong, so it virtually always precedes or follows an extension. Yeah, not sure if we had an extension here. Probably we had one, like if we, I'm not going to switch back right now. Double flat, the word flat. Okay, no, we need the rules and guidelines. So where are they? They were page, yeah, like. So in case you're wondering what I'm looking for right now, there is somewhere in that nice book are all the rules and guidelines for certain patterns. No, that's just detailed analytics. Maybe, no, not, it's definitely not chapter 3. So, but as far as I recall, it was before. There we go, flat. A flat always subdivides into 3 waves. Wave A is never a triangle. Wave C is always an impulse or diagonal. Wave B always retraces at least 90% of wave A. I'm gonna put that SD card here as a bookmark. So let's see if we're retracing 90% of, wait, what, wave C? Wave C, wave B always retraces at least 90% of wave A. We're actually retracing more here. So wave B usually, guidelines, wave B, so yeah, that's fine. Wave B usually retraces 100 and 138% of wave A. Wave C is usually between 100 and 165% as long as wave A. Wave C usually ends beyond the end of wave A. Okay, those are the guidelines, so though they don't have to all apply. When wave B is more than 105% as long as wave A and wave C ends beyond, then it would be when wave B is more than 100% as long as wave A and wave C does not end beyond the end of wave A, the entire formation is called a running flat. Okay, that might be the case here. So we're going to check if wave B is between 100 and 138% of wave A. How do we check that? Yeah, like probably let's take a Fibonacci extension and throw it on wave A. Okay, and now if we put that on wave, then we need to do that the other way around. So actually need to do it like this, so like that. So, and that point goes down there. So we have the other way around. I want to have it to the bottom. So this one here, and it still switches it to the top. Okay, then if we use a retracement, yeah, retracement was the right one, not an extension, because we're looking to see if we reach the 100 to 138. And we can see that wave B in this case would go not to 138 because 138 would be at 76, but we go across the 100. And can I add the 105 mark here? So 105. why the 100, sorry, switching to the screen. Yeah, sometimes forget that. Hi, Akashi. Thank you for using your mobile data to watching the stream. So 105. So as you saw, or as you now see, I added a Fibonacci retracement here for wave A to show us how far wave B retraces. We can see that it's more than 105. So if I scale that a little better, that we are beyond the 105 mark now. Switching back to the book. If we now say, okay, then what do we have? When wave B is more than 100% as long, wave B is more than 105%, and wave C ends beyond the end of wave A, which we don't have. When wave B is more than 100% as long as wave A and wave C does not, it's called a running flat. Okay, so there's no additional information here other than that. So I'm going to remove the 105. Don't need them anymore. Where did they go? 105. There we go. Apply. So basically now it subdivides into 335. So if it were flat, it would subdivide into 335. So if we look even a little closer and go to a daily chart here, then this here would need to, yeah. So although that might actually, if we go to 4 hours, okay, that takes a moment. So if we now zoom out, yeah, not too much. So while it's loading, I also want to point, and switching back again, forgot there. So I'm just zooming in right now to try to identify like if that's 3 waves or 5 waves. Right now, I would actually tend to say it's 5 waves, but that might not be the case. And if it's 5 waves, then it could not be wave A of a flat corrective pattern. Also possible that our point 5, so our 1, 2, 3, 4, 5 down here didn't end here, but actually ends here if it's 1, 2, 3, 4, 5 down. And at this point, it's worth mentioning that obviously, or not obviously, but corrective patterns are the one where Elliott Wave Theory has the most flexibility, yeah? Which also means it's the part that is the hardest to properly label, because the corrective patterns, you have so many variations where you only have 3 impulsive patterns, and they are called impulse, leading diagonal, ending diagonal, and all of them are labeled 1, 2, 3, 4, 5, and only are like made up a little bit different, but mostly the same. Only the ending diagonal is a little bit confusing because it consists of corrective patterns instead of other impulse waves. There is a total of 2, 4, 6, 8 corrective patterns that by itself sometimes are relatively similar. And yeah, we just have to consider that. So now I actually changed it to 4 hours, but it still doesn't give me... Oh, now it does it to 8. I don't want to have 8 hours. I want to zoom in to see more. Yes, let's see. Maybe I zoomed out by mistake now. Well. Oh, yeah. So we still have like 8 minutes left in the stream, so hopefully the loading will finish by that. Okay, now let's try this. Yeah, now it goes 16. Are you shitting me? I'm just constantly moving in the wrong direction here. Yeah, sorry for that, guys. Yeah, so I'm just gonna select it from here once the loading is finished. And then we'll take a look. If we don't manage to finish this today, then we'll have to do it on Monday. Yeah, so because right now it's obviously I'm gonna just, while it's loading, switch to here. Right now it's obviously a crucial question because there's a huge difference. If this is already our entire corrective pattern, then we would buy here, or then we could buy now and say, okay, hey, we're gonna have a huge upside because this is wave 1, which means we're actually looking at more than 100% upside. Whereas if this is not yet the finished corrective pattern, then we potentially have more downside. It all depends on where wave 4 actually would be on the previous degree. Sadly, the tools on TradingView are not as powerful. Or we can try wave basis. So there we might have slower loading times real quick. So let's see if we get wave basis to work and if we can find Disney there. You can sign up for wave basis. I'm not sure if there is a link for that in the description down below. It's a paid tool, but if you don't pay, you can still then use it, just with some limitations. Like, for example, as you can see now, it does not honor my search. Walt Disney Co. There we go. That's the right one. Yeah. So, and if we're now here, we are on the monthly chart. Although there again, apparently a split has not been considered. But if we say, okay, this here would be, yeah, I cannot set that as wave 1. So 0, 1. What's the beauty of wave basis is it automatically gives us profit targets. So yeah, and not just support resistance, but all smart tools. Yeah. So, and if we adjust that a little bit, so we can see that the profit target varies depending on where we say the wave started and depending on where we say the wave ended in terms of price. Yeah. So, and it would say actually that the corrective pattern is expected to go into that direction. So we could technically, and that would be the interesting part, because if we now say this is the wave 2 point, then we can lock that in, and it's that forecasting from wave base is not always 100% accurate. So don't get like your panties up in a bunch or so because of, oh my God, that's so much. Yeah. But technically wave basis would say, hey, if this is an impulse that started here back in 2002, although they also lack data because they lack a lot of years data. So technically we have our starting point. Where's our starting point? Our starting point would be, let's switch to logarithmics here real quick and circle back. Our starting point would be in 68 at 0.22. Yeah, so I'm not even sure. Or yeah, let's circle back here. Let's finish that here in wave basis real quick. So in 68, which we cannot even see here, but at 0.22. So now I don't know where that wave thing now jumped. Okay, there we have it. No, we don't have it. Can I? Okay, so let's delete that. Can I delete that? Delete wave. Okay, let's try this again. So if we say our start would be in whatever, we cannot go further back. So let's say here. Can I put it here? Okay, I can only put it here on the chart. That's a pity. And now it doesn't lock that in. Super annoying. Yeah, now I broke wave basis, as we clearly can see. So if we say the start would be here, and again, I don't care much about 2, 3, 4 here. But it's also important because the start at 0 point, and I cannot, yeah, like that I cannot set. It jumps then into nowhere. Yeah, so we don't have complete data, but oh God, how annoying is that? Because the retracement area, as said, varies also with 0.0. So that's also not useful because of incomplete data. Here we finished the loading. Now I'm going to switch that to the 2-hour chart manually here, and actually to the hourly chart. So 1 hour, which goes faster. And now the question that we were having is, no, I don't want to have a pitchfork. I want to have the drag tool. Yeah. The question we were having is super annoying. Where do we have that wave? Here, wave A. Can we please? Okay, so if this here subdivides as an impulse, and it would work out as a 5-wave pattern. And in there, we would also see 1, 2, 3, 4, 5. So that checks out some corrective pattern. 1, 2, 1, 2, 3, 4, 5. That would check out. No, like that need to be 5. So that doesn't check out. No, that's actually 3 waves because that would likely be A, B, C, or in some form. So that I would say to my eye that checks out. Yeah, like. Again, somebody else might disagree, then feel free to share your opinion in the chat. But basically what that means for Disney is it's actually right now worth the risk. So I'm going to invest like a little bit of our portfolio in Disney. So, and to be precise, it's going to be a little bit more than 1% of the portfolio that goes into Disney now, with our stop loss being at the level 4. So, or we're going to check right now. So that would be at, what did we have here? 79, no, low, 79.07 or so. Yeah, 79.07 would be our stop loss, which means we would have 18% risk, whereas our take profit would be, yeah, like how high can we set it? For that, let's switch to the monthly chart. But again, we are lacking so much data here because technically, if we get rid of this and get a Fibonacci extension here that we cannot even put in the right place, which is a little bit of a bummer. Yeah, so because our extension should be not at negative, but at 0 point something. Yeah, I think that's as close as we'll get it. And our extension target would be at least here 276.98. Now that would be obviously a long-term trade. So we're looking at 18% risk versus 185% reward. A little bit, yeah, like, I mean, that's a little bit more on the inaccurate side here because again, we cannot label it properly because our data source is not accurate. But yeah, like considering that if, or when we look at the monthly chart on TradingView, that the only pattern that really would check out would be 1, 2, 3, 4 in some way, 5, and we already had the huge correction. I'm not too I don't know, like I'm confident enough that that checks out reasonably enough to make the trade. So with that, we're actually gonna, as said, like 1.6%, or no, let's make that 1.3% of our equity now goes into that. So as said, risk 18.71 or 72, and profit roughly 800, 184 or 85. So with that, we have Disney on the books. Although I'm gonna, and we're a little bit in overtime, so although I'm gonna put it on my to-do list to actually fix the data sources so that we hopefully have proper lifetime data, I have to write the interactive broker support and check out like what I have to subscribe to in order to get the long-term accurate data, because clearly it makes a huge difference. Because if we just would look at that, the data we have, then the forecast would look completely different because we would start labeling from a different point. Yeah. And yeah, anyway, so you obviously have to decide for yourself if you make that trade or not. Personally, as said, this is not one of the, or this was not one of the most easy, straightforward, convincing, and like straight card positions that we opened so far. Yeah, so it's not one of those cases where we like, yay, that is so easy, that looks like this and definitely matches the criteria. But with like having incomplete data sources in 2 of the 3 tools that we're using, yeah, made it a little bit harder, but we'll see how it plays out. Risk reward ratio definitely is good. So if I'm wrong, the loss is basically 14% of the 1.3% that I invested. If we're right, then the profit is 185% of the 1.3% that we invested. So with the option, of course, that along the way, when it turns out, when we have some confirmation that we're right, we can always increase our position. Yeah, last but not least, before we call it a day, again, we're a little bit in overtime, so, but because I just see it on the other hand, our Shopify position appears to be doing great. Now there we also suddenly in the 2-day chart, so let's zoom out here. Yeah, so gapping up, which would indicate the start of a third wave movement. Now, Shopify, we believe on the biggest scale that this was 1, 2, and now we are in the beginning of wave 3. Again, that's a long-term wave 3. We talk multiple years here, which again would need to play out as a 1, 2, 3, 4, 5. And if we have some gap like this, then it's likely that that may be, I mean, it's not guaranteed in any way or form. Yeah, how can I? Yeah, that this might be the breakout for 1, 2, or 2, and now that we have a breakout here for wave 3, 4, 5, so which makes then up wave 1 of a smaller degree or of a bigger degree, and that 1, 2, 3, 4, 5 then eventually will make up that actual wave 3. so far. So again, like not all our positions, like, I mean, obviously that one right now looks great because we are like up 24.5% so far on that position. And we have, if I'm not mistaken, let's check real quick. We have a portfolio. We have 2.6% invested in Shopify. However, on the other side, of course, there are also things like, for example, Black Knight Inc. Let's quickly take a look how that's doing. And here we're going to zoom out again to see the bigger picture. Black Knight Inc., where we are currently down on the position 10.8%. And where it looks like it turns out that our labeling here might have been wrong. So we see that we here clearly have a new low. It's not yet the low that we are bargaining for. Our stop loss is at 52, so we still have like 10% wiggle room. So like 10% risk currently, or it's 10% of the entire. So no, we have 5% left risk here. So yeah, like we'll see how that goes. So, but definitely might be proven wrong here with that one, but that's okay because we only try to make the trades where we have small risk and huge reward, which means I don't even have to be right 50% of the time for it to be hugely profitable long term, as evidenced by my historical performance. Anyway, and I forgot to share my screen, so quickly to finish that up. So we had Shopify here with like the gap here, which potentially could be that this is 1, 2, and now we get the breakout for a wave 3, which then makes up 1, 2, 3, 4, 5, which will make up this big wave 3. And then Black Knight Inc. here, we have this new low, so we're currently at minus 10% on this one. And our stop loss is 52, so we still have a little bit room to drop before we hit our stop loss. Once that's the case, well, then we have to reevaluate or just wait how it plays out. Overall, might actually, the stop loss, if we set it at 50, doesn't make a huge difference here. If we double check that real quick and just throw in another retracement here, so for the overall wave pattern, then so we are already beyond the point that we usually would expect. So if that hits the stop loss at 52, so be it, even if then maybe it turns around at 50 or so, but like not worth increasing the stop loss. And here our original labeling would suggest, okay, again, little risk, so to 52, huge potential reward. If it turns out wrong, then it turns out wrong, but we'll see how it turns out. On Monday, we'll have a review of all the positions. This was the last stream for the week. Don't forget to, the streams for next week are already scheduled, so don't forget to check them out and click the notify me button so you don't miss them. And other than that, check out my other live streams. I'm later in the evening live on Twitch for some casual gaming and small talk. And that's then actually the last stream for this week. And then I'm again live on Sunday on Twitch. And then Monday we start with another episode of Daily Market Mastery. And on my regular YouTube channel in the morning, we have Comment Chaos Live and then the regular Twitch stream. So anyway, have a great day and a great trading week. Let's see how the markets